Okay, so I missed a lot that happened here for Onyx Coin. Onyx Coin right now is just below 5% in price right now, and it's testing our 50% of our Fibonacci level. After a massive pump earlier this month that I missed, price action is starting to tighten. So what's next for Onyx Coin? A breakout continuation or a deeper correction? Let's go ahead and take a look. So right now, Onyx Coin is trading at 0.01758, again, just below 5% in the day, and volume itself took a hit of 14%. Going into the daily time frame here, we can see that the price is hovering around our 50% of our Fibonacci level. This here is going to be very, very crucial because from that uptick that we saw on April 9th, we've seen this small correction towards the downside, and it's just a small correction. Normally, that is really good in terms of this uptrend because that momentum of that continuation for that uptrend is going to occur. However, we may be losing momentum because price is retesting the supporting area. Now, the lowest I want to say would possibly still have the bullish uptrend intact would be around our 100 moving average here, which is 0.016. So if we do lose that 50% of our Fibonacci, if we're able to hold and maintain this, then it's still going to have this bullish uptrend still in play, still intact. That momentum hasn't quite been broken quite yet. Now, a few of our indicators here, we see the RSI around our 55%. So we're still hovering around neutral territory, a little bit more in the bullish territory, but we're still not considered as oversold or overbought here. If we do want to see more of that bullish momentum formulating on the RSI, ideally we do want to see a little bit more of an uptick towards that 60%, especially around this area of support. So it's definitely needed here. In terms of our MACD indicator, we see the MACD indicator showing fading momentum as these histograms are getting smaller and our K and our D line are getting closer together. So as we see these two lines getting closer together, if we do see that crossover, then that shift of momentum is going to turn red, which is very bad here for the bulls or the bears, because the bears are most likely going to take over this 50 and drive the price closer to that 38% of our Fibonacci. So something that we absolutely do not need if we're seeing this uptrend continue. So as long as we're able to hold either that 50% or just below it here at 0.0167, then we have a clear shot here to continue this bullish uptrend towards our 61% of our Fibonacci. But most importantly, our immediate resistance line here is just slightly below it at 0.0195. Now, again, we do need some higher volume to make this play happen, especially if we're kind of dangling just below our supporting area here. However, on the downside, if we do see a close below our 50 today, possible rejection or possible supporting area is going to be tested at this moving average. So keep your eyes glued here. Just watch it very closely to see if we're able to see any type of candlesticks holding us here and seeing a nice recovery. Because if the bulls may not be able to regroup here, then most likely we're going to see a steeper correction and this uptrend won't sustain any further. So just be prepared for a pullback, but hopefully cross your fingers and not a deeper pullback. Let me know what you guys think down below in the comments. Thanks so much for tuning in with me today, and hopefully I'll catch you guys tomorrow. Bye.